Welcome back, everyone. Today is May 19th, 2020. Now, I've just created the thumbnail for this video, calling it Moonwatch. And today I'm going to dive into this PNC Bank relationship with RippleNet. And I pose the question, will it become a RippleNet Monster? And boy, I'm sure glad I'm looking at this because that is a P, not an R. Boy, it's good to proofread on the fly, right, while you're recording a video. Perfect. So anyway, before I get into an article that I brought up, I want to play you this clip from the Real Vision daily briefing that I get at the end of each business day. So enjoy this clip. I'll catch you in a couple of minutes.
Thanks, Ash. Yesterday, we discussed PNC Financial's sale of its massive stake in BlackRock. Today, I want to look at that deal in greater depth and explore why it's so significant within the banking world. The deal, which totaled just over $14 billion, is the largest equity offering since Alibaba's $25 billion offering in 2014. But that's not the reason that this deal turned heads, nor is it about the $140 million in fees or the $1.1 billion buyback that BlackRock managed to do, nor is it even about the fact that PNC Financial sold its BlackRock shares at a 7% discount. No, the reason this deal is sending shockwaves throughout the banking world is that this sale leaves PNC extremely well capitalized at a time when banks, particularly regional banks, are facing perhaps the greatest insolvency crisis in their history. In addition to booking a $5 billion gain on the sale after taxes, the deal raises PNC's common equity tier ratio from 9.4% to 11.4%, above many of its peers. PNC Financial CEO Bill Demchak told the Financial Times that the purpose of the sale was explicitly to shore up the balance sheet in these trying times, and that PNC specifically has its eyes on buying another bank, his exact words being that they wanted to play offense. Since the sale, analysts have been cooing about PNC's improved financial health and have been finding a lot more to admire on its balance sheet than its newly found cash buffer. For one, PNC seems less exposed to the sectors that have been most affected by COVID than its competitors. The bank has a very low percentage of impacted loans, or loans in areas such as hospitality, energy, retail, and food services, just 7% compared to the median 11% that Bloomberg Intelligence found when comparing it to other regional banks. Accordingly, PNC Financial has a very low rate of loan modification, which is when banks lower interest rates or extend deferrals in order to ensure payments. Looking at other metrics, the reserve levels relative to stress test losses are nothing to scoff at. And while PNC's charge-offs are average, more importantly, they're narrow. And this range-boundedness can be very attractive at a time when investors are putting a significant discount on uncertainty. The perceived strength of PNC's balance sheet could be one reason its debt is trading at a premium to its competitors. The equity layer, not so much. It's done decently well, but trough to peak recovery, we're not seeing as wide of a dispersion as we see in credit. One reason this could be is that the bond market reflects investors' anxieties about the balance sheet, while the stock market reflects their hope about the income statement. Equities, after all, are an anticipatory asset, whereas in fixed income, it's all about getting paid. So that could explain the discrepancy we see between the bond market and the stock market. I hope that sheds some light on why PNC Financial was the only stock that Warren Buffett went net long on in Q1. I think the reason that this sale is so significant is that it shows the importance of having a capital buffer. If cash is king, this deal was its coronation. And with that, let's go to Mr. Credit Write-Down himself, our managing editor, Ed Harrison, with senior editor, Ash Bennington.
Welcome back. My favorite quote is the CEO of PNC saying, "We are going on offense." I want to draw your attention to this BankingDive article. This is from back actually in September of last year, okay, September 2019. However, if you take a look at this, PNC Bank launched on Ripple's blockchain payments platform RippleNet on August 29, becoming the first US bank to process cross-border payments on the network. The launch comes a year after PNC, which has $400 billion in assets, first announced it had joined Ripple's platform. The service is available to corporate clients of the bank's PNC Treasury Management Unit, according to Payments.com. The partnership introduces the blockchain platform to PNC's 8 million customers. Wow, using RippleNet will give us the ability to receive a payment from an overseas buyer against their invoices instantly, transforming the way they manage their global account receivables and allow them to better manage their working capital, a PNC spokesman said. Now, two things that really jump out when you understand their reason for getting involved with RippleNet. Number one, it wasn't necessarily for John Smith or Raul Gomez to send $100 back to their family in another country. No, 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 no. This was really about being able to get corporate clients who have receivables on a platform in which payments can be made in real time. Now, how long do you think they will go before they start utilizing a digital asset to make those payments actually settle? It's not going to be that long. I'm telling you folks, all the ducks are lining up. The dominoes on the board are being positioned, and it's not going to take much to get this thing going. Now tomorrow, I'll give you a little teaser. Tomorrow I'm going to do an entire video on my thesis around the Ripple Capital Loans program, department head, which they've obviously put on their Ripple website for hiring. We'll get into that, and you'll see how a lot of these entities are starting to line up. When liquidity is more and more and more of the narrative that we hear every day, and a tech solution that is no newcomer to the game has their answer, has their solution, how long before everybody is on this platform? I don't think it's going to be that long. This is extremely encouraging. I hope that you got something from that Real Vision clip. I hope you got something taking a peek at this article again and reframing it in the context that XRP is going to be available for fractions of a penny up front through loans. We'll dive into that deeper tomorrow. And until next time, everybody, pura vida.